Hey everyone, John Hunter here, and today in the market psychology video, we're going to be taking a look at the S&P 500, the old S&P. And we have a range on the day, very obvious range, and that's really to be expected. I mean, zooming out, we had a very strong run up from the lows, and that was a strong trend that really went the entire day, even closing very near its highs. So when you have a strong trending day like that, very frequently the very next day, the following day is going to be a range, and it makes a lot of sense. Everybody's kind of getting their bearings back, right? They had everything blown out of the water, all the other analysis that they had just slamming higher. Now they've got to figure out what to do. And that inevitably leads to a range on the morning. Now, you never know it's going to be a range right from the start, but when you start off the morning with a decent bear candle, no follow through, weak bullish closes the gap, weak bullish again into a doji, into a bull, you got a pretty good clue that we're going to be a range. Now, the reason I have a buy here is mainly just because of the fact that this is a range based off of yesterday's information, right? So we know that if we're going to be using yesterday's information, where's the likely range high going to be? Right back to the prior high of day. So knowing that the sellers have failed, they weren't even able to trigger in, we've been filling the gap, we've been trying to ping back and forth, and the sellers are getting nothing going at all, along with the fact that if the sellers even tried or even thought about selling underneath that candle, they got trapped in and immediately pushed back up. There's a good sign that we're going back up to at least these highs before we find an area of resistance. So a beautiful option to buy for a quick little move up towards the highs. And just as expected, we hit the high a day and they can't even close past it. Biggest bull candle of the morning, absolutely no follow through, right? That is a really good reason to become a seller very quickly. If they were going to be breaking this out, you'd see something along the lines of, well, this, right? Something very obvious. It's obvious that the buyers took control there. They're able to close above the highs. It's a very strong candle and it got continuation. This is the type of setup that you'd be looking for if it were a breakout. Unfortunately for them, that's the opposite of what happened. They had a weak candle, failing to even close beyond the highs in already an assumed range day. That's a really good reason to become a seller and drive the market back down to the lows. Now, obviously, everybody had that same thought because it hammered lower on a huge bear candle. And that big bear candle, biggest bear candle of the day, biggest candle of the day, coming off of an area of support and resistance, and now we're back at the lows again. You guessed it, we need to be looking to buy. You buy into it knowing that the breakout attempt lower is going to fail. It's a range day. Even if it does go lower, they're just going to find more buyers underneath the low anyway, and you're looking to go back up. Everybody also agreed on this one because it rocket ships to the highs. And it's literally rinse and repeat. We just did it on this one. We bought the lows of that one. Now we're looking to sell the highs of this one, assuming the exact same thing is going to happen. We slam higher. Sellers sell into it immediately, finding more resistance at the prior high of day, double topping on the high of day, and you drive the market back down. Now, this setup right here, this is one that's a little bit trickier because it's happening in the middle, and trading in the middle of a range is always very difficult, usually. So this one should have like a little asterisk next to it or something, a little caveat, but it's very similar to what we had here. If we're cycling off the range highs, this missed the range lows. Where are we likely going to find the range lows? Probably yesterday's information, the low down here. That's what we're looking for. And the fact that we've missed it so far, and this isn't a sign of exhaustion like we had this massive bear candle here, or this massive bull candle, this is sustained selling. They just trapped the highs, so buyers are stuck in the move. We know that if buyers did buy this as a potential bull breakout, their stops are underneath the lows. And if the sellers sold this, they never got stopped out. Their stops are still above the highs and they defended it. So sellers have a better argument right now to go back to the lows of the range, and that's what we need to look for. Beautiful sell opportunity to drive the market right back down. And that's the range day, right? Treat it with respect. If you're on the wrong side of a range day, it can hurt a lot. So you have to be really careful on these types of days. But as long as you're treating it with some common sense and treating it with the respect that a range day deserves, you should be perfectly fine. So that's a great example of combining technical analysis along with market psychology. Hopefully you learned something, and we'll see you next time.